So what are we expecting in terms of what the end result could look like for Ant after going through all of this, and what the timeline also may look like?
Well, I think authorities are obviously trying to prevent what they say is kind of regulatory arbitrage on the part of technology companies, whether it's Alibaba/Ant or Tencent or others, as they move into financial services. Obviously, they have. I mean, Ant's biggest source of revenue is from its big micro lending platforms, which are not so micro anymore. Some $268 billion worth of outstanding loans on Huabei and Jiebei, the two lending platforms, as of June. So they want to kind of bridge that gap where there is regulatory oversight on financial services. The big state-owned banks have to, have the capital requirements and the like, but the technology companies have been allowed to grow at breakneck pace. And as those technology companies have moved into financial services, they have not necessarily been under the same regulatory framework. So they're trying to narrow that gap and have more more oversight of these sprawling conglomerates, really, like Alibaba/Ant. So Dow Jones is the latest one to report on this. Bloomberg had a story a couple of weeks ago, as well as the Nikkei, about the possible plans of putting all of the assets into a financial holding company, which Dow Jones is now reporting. And the latest step would be then that the PBOC would have basically oversight of that financial holding company. And they are saying that this plan has been submitted by Ant/Alibaba to authorities for review. We definitely know that authorities are looking at a financial holding company for Ant, that they want them to as well return its main business to payments, because lending has become the biggest revenue generator now. They want it to maintain its core business as payments. And then on those lending, they want the capital buffers and requirements to come up in line with financial institutions. So therefore, they share the risk along with the banks, as well as improve corporate governance and discipline at these lending units.
And Steve, it's not just lending units, and it's not just Ant, despite them being the biggest player, right? It's expected to go into really every corner of fintech in China.
Yeah, that's right. I mean, we're hearing that the three financial watchdogs are all talking about the reckless growth, the reckless push of these technology companies into finance. And there are many micro lenders. We know over the last half decade or so, the push to crack down on shadow financing, as well as the risks in peer-to-peer financing and the fraud that has crept up in there. But, there are something like 7,000 different micro lenders in China. On the one hand, this is a big crackdown, of course, on monopolistic behavior. But on the risk side, it's these 7,000 different micro lenders also are not necessarily playing by the same regulatory playbook as the bank. So again, that regulatory arbitrage term comes into play. So that's going to affect competition. There should be some shakeout in those micro lenders. But these micro lenders are not just giving out loans, they're also in wealth management. There's a credit scoring system that needs to be overhauled. There's, again, payments, which has already come out with some draft rules coming out on the anti-monopolistic stance for payments, which is dominated more than 90%, of course, by Alipay as well as WeChat Pay. And then, of course, peer-to-peer lending will obviously come into more regulatory scrutiny and crackdown.